Without any further ado, we will quickly start the panel discussion number 2. Honorable Mr. Anant Narayan Gopal Krishna sir from SEBI is already here. So I want all of y'all to please be seated as we're all set. Of this particular panel is going to be based on the regulatory landscape and structural reforms for a vibrant capital market. I request everyone to kindly be seated as we're all set to begin the next session. This session will cover issues related to enhancing transparency and accountability, better financialization of household savings for retail participation, redefining role of regulators and intermediaries in capital market, ease of doing business, KYC norms, rationalizing compliances and procedures, strengthening governance at market infrastructure institutions, risk management, capital versus collateral, transaction cost, implications of union budget on capital markets. Mr. Anant Narayan Gopal Krishnan, whole-time member, Securities and Exchange Board of India, SEBI. Can we welcome Mr. Anant with a huge round of applause? Ladies and gentlemen, come on, put your hands together. Mr. Anant Narayan sir is here. Ladies and gentlemen, let's give him a round of applause as he joins us for this panel. Thank you so much, sir, for joining us. Next up, I would like to call upon our moderator, Mr. Palak Shah, Managing Editor, Business World. Ladies and gentlemen, let's give it up for Mr. Palak Shah. Thank you, sir, for joining us. Now we have eminent panelists on this panel. Let's welcome Mr. Love Chaturvedi, Chairman, National Council on Capital Market and Investors Protection, ASSOCHAM and ED, and CEO, Reliance Securities. Let's give it up for Mr. Love. Ladies and gentlemen, come on. Next up on the panel, we have Mr. Sandeep Bhardwaj, Co-Chairman, National Council on Capital Market, ASSOCHAM, and Chief Operating and Digital Officer, HDFC Securities Limited. Let's give it up for Mr. Sandeep Bhardwaj, ladies and gentlemen. Next up on the panel, we have Ms. Savitri Parekh, Company Secretary and Compliance Officer, Reliance Industries Limited. Let's give it up, ladies and gentlemen, come on. Next up on the panel, we have Mr. Rishi Nathani, Chief Business Officer, Multi-Commodity Exchange of India Limited, IMCX. Come on, give it up, ladies and gentlemen. Yeah, let's do it. Last but not the least on the panel, we have Mr. Naveen Mathur, Director, Commodities and Currencies, Anand Rathi Share and Stock Brokers Limited. Ladies and gentlemen, a round of applause. Now, I would like to request Mr. Love Chaturvedi to please felicitate Mr. Anant Narayan Gopal Krishnan sir with a bouquet. Can we have a round of applause, ladies and gentlemen? Anant sir, it's a pleasure to have you on this panel. Before we start the session, I request Mr. Anant Narayan Gopal Krishnan sir to please address all of us. We're very pleased to have you here. Can we have a round of applause, ladies and gentlemen?
So thank you very much, ASSOCHAM, for giving me this opportunity. Apologies, I will not be able to stay, and Palak, a special apology to you. I'll not be able to stay for the entire panel discussion, but at the request of ASSOCHAM, and they've kindly agreed, I'll give some opening remarks. I'm happy to take a couple of questions if there are any, and then I need to run because I have an engagement at SEBI Bhavan, which I cannot avoid. What I thought I'll do is give a very quick overview of this panel's topic about, getting the retail people inside, turning savers into investors, and the regulator's role and perspective around the whole process. To start with, just a quick reminder, SEBI's role, you often hear of it in the press as being a danda leke, ek regulator aa gaya hai to catch, wrong things and so on and so forth. If you see the SEBI Act of 1992 and the preamble which comes to that SEBI Act, there are three pillars to SEBI's mandate. The first is investor protection, the second is market development, and the third is market regulation, securities market regulation. If you put these three together, it's not just being a regulator. The role is to ensure capital formation ensues. Now, one way to ensure that there is no wrong thing happening is to stop everything. But that doesn't mean that capital formation can ensue. So this is something I try and remind every audience I meet. Our job is not just to be a regulator, it's also to ensure that capital formation happens. Now, over the last few years, in fact, over the last 10 years or so, maybe even longer, we've actually traversed a fantastic journey in terms of capital formation and in terms of converting people from savers to being investors. And I think the entire ecosystem, whether it's the regulator, whether it's industry, whether it's the intermediaries, whether it's the investment schemes, the media, retail, everybody actually has played a role in the success. Some of these numbers are worth remembering again and again. So for instance, as of March 2020, before COVID really caught on, we had about 2.2 crore unique investors in mutual funds in India. Today, that number has crossed 4.7 crore unique investors. In terms of unique demat holders, that number used to be about 4 crores or 4.2 crores March 2020. Today, that number is 9.7 crores, getting close to 10 crores. In fact, the total number of investors through mutual funds, through direct equity, all of this, who come within the SEBI umbrella has actually crossed 11 crores a couple of months back, and that number is only rising. Within that, there are lots of other good stories as well. So for instance, the mutual fund AUM as of March 2020 used to be about 22 lakh crores. Today, that number has crossed 53 lakh crores. Within that again, the retail component or the individual component, retail and HNI, used to be about 12 lakh crores. Today, that number has crossed 30 lakh crores. You know, the sachetization of savings, something which we can all take pride in as Indians, is truly unique in the Indian case. You just need 500 rupees to start an SIP in India. And today you have about 9.7 crore folios of about 19,000 crores every month coming in the form of SIPs. The average SIP ticket size is just about 2,400 rupees or so. That's the level of sachetization and financial inclusion that's really happened. I could go on and on. The metrics are quite incredible in the journey that we are seeing of people moving from being investors to savers. If I look at the B30 numbers, for instance, beyond 30 large cities, the amount of money coming in into the mutual funds, again, is growing quite rapidly. So financial inclusion, growth of the savings pie from people like you and me is actually quite tremendous. And we are becoming a nation of investors. And this bodes really well for our overall financial stability. You know, one of the earlier problems used to be if the FPIs and the foreign portfolio investors caught a cold, we would all catch a cold as well. If they sneezed, we would also catch a cold. Between October 2021 and June 2022, if I remember the numbers correctly, we saw about 2.5 lakh crores of outflows from foreign portfolio investors. This was a global phenomenon. That was a time when US rates were going up. Then February, we had the Ukraine war being launched. So everybody was jittery and they withdrew money. This was close to $35 billion going out within that short period of time. Any other time, you would have thought currency markets, equity markets would have seen a big problem. We did not see a problem. In fact, in 2022, we were one of the most resilient markets in the globe, despite these outflows. And that's because while we saw 2.5 lakh crores of outflows from the foreign portfolio investors, retail money coming into mutual funds seeking risks was more than 3.1 lakh crore during that same time. For the first time, we actually saw the domestic saver dwarfing the global person and therefore ensuring our markets remain resilient. This is not to say we don't want foreign money, we want foreign savings as well. But the fact is our financial stability improves when we have financial inclusion of the kind we have. So while we celebrate all this, there's also much work to be done. So we can only celebrate for 5 minutes and then we have to go on to the next agenda. So what is it? There are opportunities and there are also challenges that we have to encounter collectively, and the regulator has a role to play as well. Let me pick up some of these. So while we celebrate 4.6 crore, 4.7 crore mutual fund investors, we have 51 crore PAN numbers linked to Aadhaar. We have 51 crore Jan Dhan Yojana accounts in the country. So of that, we've only got a fraction coming into mutual funds so far. So we still have a long, long way to go in terms of financial inclusion, right? There is about 200 lakh crore of deposits in the banking ecosystem. Compared to that, our retail or the individual component of about 32 lakh crores is still a very small number. So there's no doubt that we have much to go in terms of financial inclusion. A lot of work still needs to be done. And I'll talk about some of the challenges as we go along. Second big opportunity, while we have all got used to a little bit about equities, about debt markets, and so on and so forth, there are a huge number of new areas and new products that are waiting to be absorbed by all of us. So REITs and InvITs, which are only now starting to catch some pace, can be a huge area of growth for capital formation in this country. What does it effectively do? If you have existing infrastructure or existing operating real estate assets with you, you can actually monetize that using InvITs and REITs. For the investor, it can give you a good dividend income, a good source of annuity kind of income on a reasonably safe asset. And for the person who's making the investments, you can actually monetize your assets only to put back fresh capital into the capital formation cycle, right? The amount that can be unlocked technically is quite large. As of now, we have close to about 3 lakh crores of outstandings of InvITs and REITs. I think this space has a lot more to grow, and we need that education to continue so that participation in these very exciting markets can increase as well. Along with InvITs and REITs, in the area of green and sustainable finance as well, there's a lot of opportunities that are going to come up. There's no doubt that we need a tremendous amount of capital, both for transition finance as well as for managing these emissions and reducing the risks of climate change. As of now, we are not creating enough capital for that cause. And there are ways in which we can channel savings into that particular area as well. So in terms of new areas, new products, there is a lot to be done. So it's not just new investors, it's also new areas. Now, what are some of the challenges which come along with these opportunities? The first challenge that I can think of as a regulator relates to cybersecurity risk, and the risk of technology. While we celebrate technology and the fact that we've got DMATs on systems, we are pretty much paperless in the way we operate right now, there's also a huge spillover risk which comes on cybersecurity. We need to be extremely well informed at an individual level about technology and technology risks, especially as we rely more and more on our phone for all of our transactions and all of our wealth. And particularly in the age of AI and ChatGPT, the risks are only enhanced, they don't reduce. If there is anything which gives any regulator sleepless nights, it is the threat of cybersecurity and of the system resilience, given that we depend so much on systems. So that's one big chunk area. The second area, which clearly is an area to think about, is financial literacy. The way in which we get more investors into this, becoming from savers to investors, is by getting them with their eyes open about the risks in the market. Nobody is suggesting there are no risks in the market. Unfortunately, the hawa which can go around is that this is all very, very straightforward. This is easy to get into. Look at the number of people who are making big amount of money. All we need to do is stop doing any, starting a factory or doing anything, just go into the markets and play there. We don't want that. And responsible education remains a challenge for all of us. We need to be able to differentiate between good, high-quality financial literacy programs and between finfluencers who are peddling their wares for a particular return or giving you or misleading you into acting into the markets only to play into their front running, etc. So this is a huge area of challenge which we continue to grapple with, and frankly, we need help and advice on how this can be done better. We are, of course, come out with consultation papers and suggestions in this regard, but a lot of work needs to be done. The third area is, something which I think the panel will probably discuss about, is things like ease of doing business and ease of inclusion. Here, we have two roles to play. One is to make sure we don't come in the way of good business, and the second is to facilitate ease of doing business. We've tried to do a few things as SEBI particularly, so I can give you some statistics around this. As of March 2022, there were about 71 applications for AIFs, that's alternate investment fund openings, which were beyond 6 months old. So it really used to take time for us to process the PPMs, etc., and to give registration for AIF schemes. Today, we have not a single outstanding AIF scheme application beyond 3 months. Okay? We don't even have one outstanding beyond 2 months. So beyond 2 months, the number is 0. Our intent is that very soon we should have nothing pending beyond 1 month. Okay? Now, how have we achieved this, or how are we trying to achieve this? One is, of course, by efficiency, making the processes a lot more smoother, etc. There are other things we are trying as well. So while we are scared about artificial intelligence and ChatGPT, etc., we are also trying to see if we can use this technology to actually improve our own efficiency, right? So there is a positive side to all the technological progress as well. Now, I think the chairperson of SEBI has earlier mentioned that we have started to pilot the use of ChatGPT for processing our DRHPs, the draft red herring prospectus. Now, that's a public document, so therefore we can subject ChatGPT to it. A PPM in alternate investment funds is a private document. We can't put it out to ChatGPT. We've got to be careful about that. But we are using some in-house machine learning programs to see if we can actually feed all of this into that memory and see if we can do first level processing using effectively machine learning and artificial intelligence. So efficiency on that front is something that we are working hard on. Again, some of the data which SEBI has shared in its annual reports, we are working hard to bring down our outstandings. One of the arguments used to be that our investigations take too long, our adjudications take too long. If you see the aging that we will be putting out shortly, I think, on both on investigations as well as adjudications and 11B matters, the aging is coming down dramatically. The idea is to try and make this as efficient and smooth as possible. There are other areas which are more dramatic, which sometimes we don't talk about enough. This transition to T+1 for equity markets actually is a huge move towards efficiency and making things easier for investors to get in their money and get out their money, right? And we took the lead as India compared to many of the developed markets in moving from T+2 to T+1. In fact, it's only now that the US itself is going to implement this from May onwards, right, of this year. So we were far ahead of the pack in terms of doing these changes. We are now exploring a transition move towards T+0 on an optional basis, which means we will have optionally, what we found is that most retail investors anyway have money in their account and part with it on day 0 itself when they make their purchases for shares. Why can't they get their shares the same day? On the flip side, if you need to sell shares and get money the same day, why can't you access a T+0 market? After all, we have RTGS, we have IMPS, you have UPI. After all, we have depositories which can pass accounting entries very quickly. So why can't we do this whole thing in a smooth fashion so that it's near instantaneous being able to do these transactions? Imagine what it means for the saver. Today, if you need money for an emergency, you have to keep it in a savings account or a fixed deposit, which you can break. If you come to a T+0 or eventually to an instantaneous settlement, which is again going to be optional, hopefully a year down the road, the ability of an investor to actually encash his or her money would be absolutely smooth. There are other things we are trying in terms of ease of doing business. We've come out with a consultation paper, a very comprehensive consultation paper on nominations, of how we can make nominations and successions a lot more easier. Here is again where we will require a lot of help on, give us ideas on what you think can make life easier for the Aam Aadmi. We are very happy to work on that and make the processes as smooth as possible. The last bit I'll talk about is, something which catches the media attention quite often is when we take action against, fraudulent practices, front running, insider trading, and all of that. Now, a request to all stakeholders. Frankly, as people being in the market, you would probably come across wrongdoing far earlier than we would. I would like to tell you it's the reverse, it's not. You would know first what's happening before we know. One request that I make at every single forum is, if you see something, say something. SEBI is an attentive, listening regulator. We need your inputs to tell us what's going wrong where. This is not just to catch the wrongdoers. The entire edifice of capital formation and securities market relies on trust. If the trust is broken, we will not see that financial inclusion and money coming into the ecosystem. So we are not trying to only chase wrongdoers because there's a moral element. That's not the point. The point is we are trying to preserve the trust in the ecosystem. We don't want shocks to happen where the retail person says, boss, ye to satta bazaar hai, isme se nikal jao. We don't want that to happen. So you have to help us with leads. Wherever you see something egregiously going wrong, give us the leads. We're very happy to follow up on them. We are trying what we can. We have very, very smart people in SEBI trying to detect what's going wrong. We are dipping our toes and trying to use advanced technology to look at anomalies and look at patterns which don't make sense and then try and look further. And we will continue to do so, but we need your help on an ongoing basis. I'm going to stop here just to conclude. Our job is capital formation, and that's our collective goal as an ecosystem as a whole. We've done a great job over the last few years, and I think that trend has been quite strong, but there is no room for complacency. Plenty of opportunities, plenty of challenges, opportunities in terms of inclusion, opportunities in terms of new products, challenges in terms of ensuring trust in the ecosystem, of ensuring cybersecurity and technology resilience, of ensuring that ease of doing business is maintained at all times, and most importantly, the challenge of ensuring that dialogue, two-way dialogue between the participants and the regulator continues at all times. Thank you very much to ASSOCHAM once again. Really appreciate your opportunity here.
Thank you so much, sir, for that wonderful address. Ladies and gentlemen, can we have a huge round of applause for sir once again? Thank you for joining us, sir. It's been an absolute pleasure having you here. Ladies and gentlemen, please be seated. We're all set to start the session. I request our moderator, Mr. Palak Shah, to please begin the session. Thank you.
Hello, everybody. Thank you, ASSOCHAM. I would not like to hold you long before your lunch. Usually, I wouldn't have allowed Mr. Narayan to go away like this, because a regulator on the dais is always good to ask questions and corner him, as I've done for 20 years as a journalist. But anyways, he had to go somewhere. But there are other panelists. So without much ado, I think we'll start our session here. I'm sure most of you might have heard the song, the famous song from the Buggles band, Video Killed the Radio Star. The theme of this song has been playing all along in the financial markets. The wave of technology is shaping the global engine of growth, that is the financial markets, and they are dancing only to the tune of this song, which is Video Killed the Radio Star. What I mean by this is the wave of change that keeps coming in the financial markets due to technology and regulations. The wave is getting stronger, and what is new today becomes stale the next week or the next month due to technology. In such a scenario, we want to know from our panelists how they are keeping pace with the swift changes and what is their version of structural reforms. To the three gentlemen here, first I would like to ask this question to the brokers who are present here. Mr. Lav Chaturvedi, CEO Reliance Securities, Sandeep Bharadwaj, Chief Operating Officer HDFC Securities, and Mr. Naveen Mathur, Director Anand Rathi Stock Broking. To these three gentlemen, I have a question, and I'll be point blank, sir. Mr. Lav, you go first. You tell me, are brokers really required in the current scenario? Because KYC is available at a tip of your fingers now with Aadhaar. Risk management is not required because the exchanges have all the data of the clients. Your money is taken upfront before trading. So why are brokers even required now?
Yeah, very good question. Before I lose my job, let me address this question. So actually, it's a very relevant question. Why are intermediary required at all? In the world where there is a direct access, there is a direct market access, there is an exchange that has all the capabilities to do the direct settlement directly to the end user. Why any intermediaries are required for anything? I just go back, Palak, to an interesting regulatory change that happened. That was the year I came back from US. The regulator has abolished the upfront commission for the mutual fund industry. You will remember that time. It was a 6%, and they went into the trail, and it was said that that was a death knell for the industry. There will be no intermediaries required. There will be nobody left, and then mutual fund industry is on its own, will be a direct industry only. You heard the data today. You know how, and I don't know, you know about how many folios have gone up and what is the AUM. Do you know how many IFAs has gone up? Do you know how many intermediaries have gone up since the upfront was abolished? So, Palak, it is not about so much about whether we are required in the system or not. It's the more pertinent question is, are we doing what is required? Are we adding value to the ecosystem, to the end user, to the retail, and to the value chain of capital formation, which I think we just heard our whole-time members say. And obviously, I can say that there is a lot that we are adding value. I know we are a little bit on the time crunch, but my answer will be yes, as long as we keep doing the right things, as long as we are adding value to the value chain of the capital formation, I hope we are being required at all point of time.
So, to HDFC, yes.
I echo with
How are you? He spoke about adding value. So we should tell our audience how you're adding value.
So first of all, before answering this question, what you want to understand is whatever number we are talking about as on date and celebrating, we need to be mindful of that how many unique customers are participating. 14 crore Demat account we speak about, 9 crore unique Demat account we speak about. The customers who are holding assets in this Demat account are 3.5 crore. You look at 8.5 crore people are having a unique folios in mutual fund. But when you look at people, participating in Dream 11, this is 21 crore. So the market is yet not mature. Tier 3, Tier 4, most of the participation has happened in countries location. So Tier 1 is participating, Tier 2. But the kind of distribution and dissemination is required at each and every corner in India. So all MIs are required, or participants are required to take it forward. Coming back to your question, how we are doing so. As technology takes place, it becomes easy for us to take information from Tier 1 location to Tier end location in India when you go to Jammu Kashmir to Kanyakumari. So with the help of technology, investor education becomes easy. It becomes easy to disseminate your products to customers because there are mediums where you can guide customers to make a right investing. Today, most of brokers, most of other players are using their technology solution, which can be in terms of mobile applications, web trading applications, learning portals, and investor education programs, which disseminates the same information across length and breadth. So there's such things.
So you're saying brokers are only for kind of education now?
No, see, I'm not talking about the regular things which, so I think talking about building up an infrastructure which helps customers to execute and making decisions. See, Palak, what we want to understand is, what is this model is all about? What is the model of investing is all about? Investing model is all about helping customers to take decisions. And if in the world of DIY, where the DIY world is so prominent, is investing is DIY? No. Investing is not yet DIY, execution is a DIY. For an investor, pressing a button of execution becomes DIY, but how and when? When the decision making becomes assisted, the decision making being assisted by the way of information or by way of advice. That's what the intermediary come into the picture.
Okay, Mr. Naveen Mathur, how has your model evolved, or how will your model compete with the likes of discount brokers who are giving everything for free, and with a device in the hand, people can just go for the kill?
So Palak, we've been talking quite a long time on various reforms the government or the regulator has taken. We've just heard the Honorable whole-time member of SEBI about the initiatives which they have taken. Let me say a couple of things here. Everybody has its own space, okay? Technology is playing a critical role. There's no doubt that you have to embrace technology to be part of where the world is going or where the India is progressing. And therefore, the technology is the key. But it is just not the technology or the fintech players. I would say, I have a very, contrarian view of what we've been hearing since morning. As a broker, means we, Anand Rathi, are mix of the kind of technology. We are not the discount ones. We are not just the fintech ones. We are orthodox in terms of the offline model of providing the services to the customers, and at the same time, we also embrace technology to ensure that we cater to that category of customers who want that technology for doing and investing in the capital markets. What I was trying to say is that this entire model of fintech, and let me put a disclaimer first. I come from Angel One, I've spent a decade there, and I've seen that transition happening from the largest offline broker, Sandeep and me, we shared a decade there. So the transition from an offline to an online Angel One today. Can we see the concentration of the business there? Means within the top 5 of these outfits, I think we would consume about 60% of the total business volumes at the exchanges. I would say that the regulatory aspect from the perspective of the capital market should also see that fintech and the technology is good part of it. But at the same time, you also need to understand the risk of the concentration, too big to fail kind of a story, which we have seen in the US in 2008. We as a broker, offline, has a trust factor. I'm not saying the fintech players don't have. You need kind of an interaction with the investor, education, other things, which matters a lot. And therefore, I think everybody has its own space. Fintech has their space. Concentration needs to be seen within the industry of how it is progressing, what steps we are taking. And we, as an orthodox, plus the online brokers, would do our bit in terms of providing the education and the trust factor to the retail investors who want to contribute, participate in our capital markets.
Sir, I'll tell you where the concentration is happening. Please.
Can I add one quickly thing is, the fintech word is the most abused word nowadays. What is fintech? I think people have to understand, fintech is being bad. Fintech is all about being relevant to the today's need. And everybody, every broker, I don't see whether it's orthodox, traditional, discount broker, everybody is using a financial technology to go nearest to the customer, basis the TG what they address. So technology is helping us to take ourselves near to our customer. It's not the far-fetching to customer in whatever needs these target segments are. So I think we need to take this fintech in a different manner rather than only being attributed to the one set of brokers.
Okay.
Okay, that's a good point.
Yeah, so I think we have paucity of time, so we'll move to, I have many questions for you brokers actually, because he spoke about concentration. I think real concentration of profits is happening at SEBI, because SEBI and the government is eating into your pie with their taxes and the transaction charges. I think that's where you need to. So, madam, you know, there are these barrage of SEBI circulars that have been coming, regulations that have been coming, the kind of changes they keep on making to those laws, like something like a takeover norm that is there, takeover rules. SEBI has made 101 changes to takeover rules, even after they came out with the new rules in 2018-19. So in that scenario, I mean, do you think it has become cumbersome for companies like you to manage it and you know, to implement those, and hence it becomes ineffective in a way? And how do you cope up with this kind of change?
Sure. At the outset, I would like to say that ineffective, definitely no. Talking of managing, gone are the days when one could just manage using a manual method. The Munimji method is no longer there in the world today. Talking in terms of tools, tools are only going to be as good as you make them out initially. So the basic logic that you put in requires huge amount of domain knowledge. Coming back to the basic question that you asked, with the plethora of changes that one sees, you know, the range that one needs to keep abreast with has changed completely. So the regulatory landscape has completely shifted I mean, if somebody had left the country, let's say 10 years ago as a professional, and were to be out of touch with the Indian regulatory scenario and were to come back to India, I can tell you he or she will not get a job today because it's completely shifted. And in this scenario, how do you keep yourself abreast? It's like being on the treadmill all the time. You need to keep jogging to move ahead. You need to be on the treadmill to remain where you are. So that's what is happening. It's of course based on what what one sees in business, and of course in India we've also been looking at the international scenario and tweaking what is in the country. Like the latest one with respect to the discussion papers and the consultation papers, the number of consultation papers that have been put out for discussions, it's really a very good sign, but at the same time it needs you to be continuously abreast. Yes, it is important, it is challenging, but once you know the method of working and
Is
finding
it
your way.
effective? Are the changes that are coming effective, or in a way they are curtailing a lot of, raising the cost, of course, I think cost factor is there.
So the cost has certainly gone up, and the pendulum, for it to settle in the middle, needs to move up both ways. So in terms of it being effective, I think in terms of transparency, there's a lot that has happened, and the information which is out in public domain, so as to avoid asymmetry of information, has gone up considerably. Talking of effective, I would like to approach the issue from an investor's perspective. Is the lay investor able to understand everything that is put up on the website, whether it's a stock exchange site? Does he even know how to go into it? Let's say, for example, NSE has a lot of important material, but is one able to use the Nokia method of 1, 2, 3 and drill down? Is something where, as was also mentioned in the opening remarks by Mr. Anant Narayan, a lot of financial literacy needs to be created. And I would also like to add in terms of, effective, I would like to take the point on KYC. There was a circular that was issued by SEBI in 19 was when they stopped trading in physical scripts, which once again was extended right up to 2020 July. What's important is, way back in 2007, there was a circular issued by SEBI that if you want to trade in the stock market, you need to have a permanent account number. Sounds so simple, and with all the KYCs today of demat accounts, this is a very basic requirement. But you will be surprised to note that shareholders who hold shares in physical form, there are a good number of them who still do not have their PAN registered with the RTAs or the companies. We've been talking in terms of unique investors. I think we also need to add another aspect to it, unique and identified investors.
Whose failure is that? SEBI's failure? Broker's failure? Or
No,
whose
I think it's very easy to be attributing blame on SEBI. It's not SEBI's failure. SEBI has put those pieces in place. But maybe awareness needs to be created. Also, there's an inherent problem in the sense that, in India, let's say if I were to give some imaginary names, maybe a person may have participated in the primary market way back in the 80s, 90s, where it was a bonus to be getting allotment in a public issue. So maybe the allotment was, application was made in the name of, let's say, Meetu Bhattacharya, while actually the name of the person is Maushmi Banerjee. And maybe in Meetu Bhattacharya there is a bank account because that's the way the person was referred to generally. So to be able to give a PAN number today may be quite a challenge. And this is something which I'm sure actually happens. So you have a large number of investors who are not identified. Of course, there are other genuine reasons where one may have just shifted residence. I'm just going to take one more minute and I'm going to actually narrate one incident which I have been witness to. A few years ago, a person had come to the security gate and my team was alerted saying that somebody has come with some shares. So one of my team members went, not in Reliance, one of my earlier organizations, went to the security gate and said, what is it? This person said, my grandfather was a security guard in this organization and we were just clearing his cupboard. I'm extremely sorry to have brought back these documents which belong to the company. She opened the envelope and she said, this is your property, they are share certificates. And it was worth some 15 lakhs then. So I'm sure there are several such investors. How does one ensure that the information goes to them? How does one ensure that persons who are genuine investors are identified? Is the challenge really. Thank you. Sorry for taking a little more time.
Mr. Rishi, Chief Business Officer, MCX. Sir, you know, exchanges, I think we have two exchanges in the country. One is NSE that have seen exponential growth, and the other is MCX. NSE, of course, came up because of heavy support from SEBI and the government. MCX eventually, I mean, MCX earlier had to fight a lot, but then eventually it also got that monopoly status on the back of support from SEBI and all. So, but you know, in a scenario where technology is changing everything, you know, you have similar challenges as the brokers. Do you think exchanges can remain like monopolies as the one you have, MCX, in the coming years without the support of SEBI and the government? Or you need to do more and, you know, keep innovating, and our exchanges are falling back on that?
See, as I believe that all you need to do is continue to do good work and grow your business. Now, while you grow your business, whether you have 100% market share or 90% market share or whatever market share, it doesn't matter so much as long as you're in a consistent growth path. And if you're adding value to the market, I'm sure the market will continue to support you. I mean, I have 3 of my stakeholders here, and I'm sure that they'll continue to support us if we continue to do good work. So, and the regulator or the government will only support you if you're doing the work properly within the extant norms. So I believe that if you are, so giving an example of a football field, if I am playing within the 4 lines drawn, I'm not going offside, and I'm following the rules, not getting a yellow card or a red card, I think, and I keep trying to score goals, I'm sure I'll score a few.
No, Mr. Nathani, that was a very general thing that you're saying. What I am asking is, without the support of the government and SEBI, you know, can exchanges, 2 exchanges, NSE and the one like MCX, I mean, what is the innovation that you bring to the market that will take you ahead? Of course, support you're talking, that's there, but what is the kind of innovation that you, or is the current regime of regulations hindering any kind of innovation
Well,
that the exchanges want to do and
Okay.
they are not about, like blockchain, you know, we are lagging behind in this blockchain race that a lot of other countries and exchanges have adopted and they have moved to it, and we are here still at the stage of discussion papers.
so we have to understand we are a large and diverse country, and also the participant profile in our country is also diverse. There are people, like Madam said, who don't even know that they're holding shares.
They're very small, not even
Whatever,
1%.
but you cannot
Not
leave
even
anyone
1%.
behind. The point is you cannot leave anyone behind. On the same point, in the earlier session I was talking that you have a road and you build a very good road, but the road is for everyone. For the person walking, person on a bicycle, person on a motorcycle, person in a Maruti car and a person in a Lamborghini. It is for everyone. And you have to make sure that everyone is taken care of. And you talked about innovation, so I'll address that question. Innovation will come in terms of products, in terms of how you address the participants. We have already seen a lot of innovation in terms of bringing deliverable contracts, in adding more hedges to the contracts, in trying to make, in terms of capital formation for Viksit Bharat, in trying to make India a price maker rather than a taker. So there are a lot of work going on, and I believe that if the work is proper, there will be support from the regulator and government.
Okay, I was asked to do, conduct this till 1:30. Can we take few questions from the audience? Yeah, we can see a few hands. 2 questions we'll take. 2 questions. It's okay.
You're audible, sir.
You're audible, sir.
Target fake articles, collections from public articles and distorted versions. This impacts the India growth story, Viksit Bharat. Year to year in the last few years we have seen post-pandemic India growth story, we are among the highest. But there are panics, it depresses the valuation. Reliance went at 650, 700, and today it is 3,000, much larger. We saw Adani's get impacted. And some thoughts from you on India growth story and what should be our fears and what should be our opportunities. Others may also add their views on the panel, may also supplement your views. Thank you, Palak, for the great opportunity given to me. My name is
madam.
Manoj. My name is Manoj Alimchandani.
Yes, sir. So he's saying does...
I think the question is to you because he wants to know as to what is India
to you.
Growth
He's
Story all
saying-
about.
No, he's saying...
At the same,
So how does this kind of campaign, he's talking about malicious campaigns and fake news, does it impact companies or how does it slow down your growth? Though I don't believe, I mean, a lot of them are malicious, but anyways.
Of course, when someone speaks ill about another, it certainly affects even a company because all said and done, it's the investors who, today with retail investors, they do tend to believe what is written, while the story may actually be different. But I think your question demands a very detailed macro analysis as well as linking it to the micro. Why don't we discuss over lunch?
Yeah, so she's saying actually investors are very smart, they lapped up all the Adani shares. You see where the price is after Hindenburg, So investors are more smarter actually. Yes, anybody, one more last question.
Yeah.
One.
Yeah, here.
One question, yes.
Again to Savitri ji only. You rightly said that there are people still, who applied to the IPOs, say before 95 or 97.
That's right.
Even though we have some small companies also which came in those days, where even till date, 25% of the shareholders do not know whether they hold the shares or not, and it is in physical and we don't have permanent account number or any further details from them. So now going forward, when the valuations have gone beyond the roof of some of these companies, what is the way forward other than that IEPF or something where also it is very, very difficult for 2-3 years, 2 years you don't get the shares only again back. What according to you can be the solution now in this world when we are moving so fast on technology? How to bring back those people and how to identify them and complete these formalities of making them the real owner. I mean, they were the owners of those shares. This is number one. Number two question is that you are holding, this such a high position in the one of the largest company of a country. This kind of circulars which keep coming from the regulators, stock exchanges and other this thing, even do you have all the technology, even you have everything, how do you keep a track of all those things? Because in a smaller setup only we find it difficult. From various departments, various circulars, various letters, individual notices to you keep coming. And they give 3 days time, 7 days time,
So they
3
have
days
such
time, 24 hours time, 72 hours time to respond. So how do you keep a track of that?
Sure. So I'm going to divide your question into two parts. The first one was how do you ensure that the identified investors get the shares? So actually if you roll back in terms of the 70s, 80s, or for that matter 92 onwards, dematerialization began, but then it was not so very popular. It took quite some time. So what was the only validating factor which companies used? That was the signature. You can't expect the signature of a person right from 1970 to 2024 to be the same, or for that matter even from 2010 to 24 to be the same. So having said that, with respect to such persons, in my personal view, brokers have a very important role to play. It's like the local grocer who knows me well, and I would go to him and get personalized service. Of course, you have the technology model also, but that's something which is for the advanced investors. So the family would have invested only through this broker. And since you do not have the PAN as a connecting factor, which is completely a foolproof one, here you would have to trace back to the family and be able to link it and then apply to the company. In case the company or the registrars have the signature card, it becomes easier. If not, one will have to link and look at dividend. Say for example, I would look at companies as dividend paying companies and non-dividend paying companies. If it's a dividend paying company and you're able to show a credit in your bank account, it then becomes easier. At the same time, there are people who may not have linked their bank account detail also. It becomes very, very difficult because trust is something, it's very easy to define, but very difficult to actually believe and translate in the commercial world, because unfortunately every time there's a fraud, you tend to put on another kavach saying that ye bhi dekho, wo bhi dekho. And physical verification is not always possible because a person may have changed, you know, transferable job or whatever. Even if it is not a transferable job, one may have changed residences. If you have your physical share certificates in your possession, that's another big proof. But I would say dematerialization is also a tougher job. You know, how does one ensure that dematerialization happens in a smooth and seamless manner is another big task which probably needs to be focused on. Coming back to your next question on how does one keep pace, I think there is no easy solution. What I personally do is my Saturdays goes in just reading and ensuring that I'm completely abreast with whatever changes have happened. So I either do a skim read or a detailed one. Detailed one goes to Sunday. Skim is, you know, where I just look at the headlines and then reserve it for Sunday for a more detailed analysis so that I can participate in sessions like this.
I'm sure
Thank you.
company pays you for working on weekends.
Karmanne vadikaraste.
Okay, one more question we can squeeze in. A very sharp, hard-hitting question. One last. Okay. Sure. Thank you. Yeah.
Because we have got 2 more sessions.
Okay. Done.
So if something is very important,
No, that's fine. I think we'll
Hello.
close it.
Sorry, sir. I think you can take it personally post the session. We have 2 more sessions to go. I'm so sorry. Thank you so much for being
thank
such a great audience. Can we have a huge round of applause for our panelists, please? It was indeed a great session. I request all the panelists to please pose for a picture and we'll quickly begin the next session.